Hello, and welcome to episode 2 in our podcast series, Credit Without Constraints, sponsored by our friends at Spinwheel. In episode 1, Tomas Campos, CEO of Spinwheel, and I discussed the theory behind how and why our credit data infrastructure in the US is evolving. In today's episode, Tomas and I go from theory to reality. How is the emergence of cash flow data impacting lenders' credit decisioning workflows and underwriting models? How does the requirement to obtain specific and granular permission from consumers to access their data change the experience of getting a loan and the conversion rate that lenders see? How are lenders approaching regulatory compliance at a time when the rules that we have, like the Fair Credit Reporting Act, are out of date, and the rules that we need, like the CFPB's open banking rule, are mired in a perpetual state of uncertainty? To help us explore these questions, and I say explore, not answer, because there are no definitive answers to these questions, but to help us explore these questions, Tomas and I were delighted to be joined in this episode by Chris Hansen, GM of Cash Atlas Solutions at Nova Credit. If you've listened to the Fintech Takes podcast at all over the last couple of years, you've likely heard Chris's voice already. He's one of the sharpest operators in the cash flow lending space, and he's someone who I rely on when trying to figure out what's coming next in consumer lending. In our conversation, Tomas, Chris, and I cover a lot of ground. Everything from compliance to UX design to model governance. We also had one of the most fun and forward-looking chats about the impact of LLMs and agentic AI on lending that I've ever been a part of, which was a great way to wrap up the conversation. If you're a lending nerd, and if you're listening to this, I assume that you are, you're going to love it. So without further ado, here is episode 2 of our series, Credit Without Constraints. Okay, well, Tomas, great to see you again. Thanks for hopping back on with me.
Yeah, absolutely. Excited to have this next conversation.
I am too. And Chris, that's your cue. Thank you so much for hopping on. I feel like you just sort of knew that people were going to be talking about credit and underwriting and cash flow data, and you just appeared like in the podcast. Like we didn't even invite you. You're just here.
Just popping up to say hello. Someone says cash flow, and here I am. It's great to see you again. Thanks for having me.
Thank you for joining us. We're very excited for this conversation. We're going to talk about, obviously, credit without constraints, but we're going to really hone in on the underwriting process in particular, which, Chris, we know you spend a tremendous amount of your time there. Before we get into that stage in the life cycle, though, specifically, I did want to ask you a broader question to start, which is, I know you've spent a lot of time studying various kind of credit data systems and how they've evolved over time, both in the US and other countries. And I was curious if you could help us kind of contextualize a bit based on your sort of macro view of credit data systems, credit bureaus, like the way that this system works today. What's one thing about the credit data system in the US that you think is maybe a little underappreciated? And then what's one peculiar thing about it that kind of drives you crazy?
Yeah. Yeah. It's a great segue into it. Misconception when it comes to the, like what could be underappreciated in the industry or what's a macro purview, I would say the credit systems traditionally were designed in a very centralized manner. I think they were designed on a furnishing cycle that made sense at the time. They distributed, there's a give-get relationship with all of the financial institutions that would make sense. Consumers' lives looked a lot different. And I think it's underappreciated that shift has, and consumer permission data has largely broken a lot of that cycle. It is no longer, monthly furnishing cycles doesn't keep up with the velocity of life for the modern consumer. And so the centralized nature of something that everybody should be able to get access to and should stay current and up to date and work for modern consumers has fundamentally been kind of stratified across the ecosystem. And so there's a lot of, consumer permission data has lived in this world of friction access and how do I actually get my hands on it and how do I think of it in a separate tune. But when you start to think of those worlds coming together in the direction of travel, I think you start to ask the question, would we have started with consumer permission data and the depth of that data if we were to rebuild the credit system today?
Sure.
And I think it's a good thought exercise to say, what are what are the good parts of the traditional system that we would pull forward, and what are the parts that the modern consumer has like pushed us to start thinking about when designing what bureaus of the future will look like. So I think that's probably my general like underappreciated is like the macro sentiment of how the bureaus have evolved and how consumers have evolved largely. What drives me crazy is hearing probably anytime there's a detractor that's really saying like consumer permission data doesn't hold value relative to traditional data.
Are there still people out there who say that?
It's still happening. You'd be surprised. I think that it just depends on kind of where within an organization you're talking to. So I think that can be a big challenge. That's something that's hard to like come back and say. The vintages take time to come to bear. It's part of the beauty and pain of anybody who lives in this space is that you truly need the pain points, and you need to understand the seasoning cycles and actually bring the vintages to bear to actually prove out the value of this data in a real way.
Yeah.
The industry has largely over the last couple of years, as you've seen, gotten more public around what that is outside of the best kept secret for the largest institutions that have a purview into the performance data themselves. But I think bringing people along who just have a natural disposition to the idea that something can be orthogonal and additive and can't wrap their mind completely around it. So like that's a large portion of time that we spend at Nova helping to consult on how should you think about this data? How do you think about it as a complement versus a replacement? How do you think about accessing this data in a thoughtful way? And it's part of the kind of the coaching part of the gig, honestly.
Yeah, absolutely.
On that note, Chris, how do you think, from your perspective, how do you think consumer permission data has impacted the way lenders underwrite consumers?
I mean, I think it has. This last year was probably one of the single most like fortifying years in cash flow underwriting that we've seen across the board with lender adoption, and actually, like I said, a lot of the performance data coming to bear for many of the players who have started investing in both the technology and the ability to do it, but putting it into their credit risk practices in a more serious way. So I think it depends on how you think about the data itself. Are you looking at an on-us audience? Are you looking at your deposits? Are you looking at how you can start to extend more line to a current customer base versus how do you think about off-us data and how you bring that in-house? How do you think about someone from a holistic consumer perspective? Underwriting aside, I would say like there's a lot of institutional focus on how do I think about the consumer across the board. And so like, how do I actually own the customer relationship more holistically? And that includes not just what you do within our deposit base, but how do I think about where else you're banking, where else you're, downloading a fintech app, where else you're doing your investments. And so like, how do I take that to the next level as an institution? I think that's what we're seeing largely. Outside of the general, Alex, you hear me say this a lot. How are people underwriting with cash flow data? They're approving more people at the same marginal bad rate, and they're starting to push into the world of things like collections and CLIs and other use cases to say, I need my entire institution marching to this drumbeat, and not just one piece of the organizational silo.
Yeah, it's interesting, right? Because building on one point you made there, I think the idea that like deposit data or cash flow data is no longer just this sort of siloed thing that just sort of sits there and doesn't really do anything and isn't thought of as like an asset. The conversation about like on us versus off us is really interesting to me, because even if it's like on us data, you're asking questions, I think now as an institution, about not only like how can we use this data, but like how can we make this, not to steal one of the words I know you guys use a lot, Chris, but like how can we make this a passport for our customers to get access to things elsewhere? Like it's becoming more of a center of gravity, it feels like in some ways, for the customer, in a way that like even when we had certain lenders using cash flow data, it didn't seem to have that like center of gravity for our customers and an asset for our customers. Is that a fair way to think about that shift you were talking about?
Yeah, absolutely. I think that both on an on-us and off-us day, it's like, how do I make more sense of the data across the customer base? And I think for financial institutions, I'd even characterize their internal customers too, outside of consumers. Like, how do I take my data out of multiple different core systems across my BUs and put them in an appropriate data warehouse where I can actually like operate on this data.
Yeah.
I think you see different, systems of record and different data warehouses starting to play deeper and deeper into the space of how do I add value on top of, core infrastructure to house this type of valuable data. But how do I make that portable and usable, I think is a construct both for institutions internally, like how do I get out of my siloed world, as well as externally, to your point. How do I think of a consumer and being able to leverage their data elsewhere? I mean, open banking and 1033 is the tip of the spear in terms of a forcing function to say who has the rights to this data. Like, how do I think about data usage and rights? I think most institutions have, gotten to the place of understanding there's value in this data. Consumers will take this data elsewhere. And how do you think and capture the most appropriate relationship that might not be a churn risk, that it might actually be advantageous if I can help enable them and be thoughtful around what are the products and services that they really need. And I know, Tomas, obviously, at Spinwheel, you guys spend a lot of time thinking about this from a consumer perspective. How do we bring this to bear and, think about the consumer relationship as it pertains to a one-to-one with the consumer and the financial institution? So I think most akin to what you're doing.
Totally. And I think, Chris, from that perspective, there's two things that I see, and I'd love to get your perspective on. One is, a lot of times we see with consumer permission approach that the sort of access, the ease of access also seems to be a big consideration, right? Or maybe the friction to access it becomes a consideration. And the second thing is, well, geez, there's a lot of data there. What do I do with it? How do I take advantage of it? How do I actually create better products or services around it? And I know you guys are also dealing with that day in and day out. So I'd love to hear your perspective on it.
Totally. Both great. I mean, you'll hear us break down the world into the world of infrastructure, analytics, and compliance, which are like the common barriers you're going to have to get through. Infrastructure, I think it depends on how you think about where you're getting access to the data. For people who have large deposit bases who can't monetize their data, I mean, Alex, you obviously have a great piece on this. Like, where do I start? How do I start thinking about the value and the breadth of that versus the impact? And like where I can actually get my hands on that data. So for on us, it's like, where do I start? Where do I have value in that data? For the off us conversation, it's how do I ensure that I have a trustworthy relationship with my consumers to bring this data over? Nova and many others in the space, have more and more innovative ways in which we're thinking about how you can persistently access this type of data with the consumer's consent and with the financial institution's consent. And how are we thoughtful about that? The world has moved from a screen scraping place to an OAuth place, and now into an even more portable version of what your financial identity looks like. I'll use the tokenized space, but what that means can be a bit amorphous. So we'll see where all that goes. But how do you be thoughtful from an infrastructure standpoint? This is something we spend a lot of time on around. Not all pipes are built equally. They all look different. Each financial institution's pipes look different, let alone anyone who sits on top of them to extract that data, let alone anyone who's storing that on a system of record. And so if you kind of take a one-to-one approach, it's very, very difficult, which is part of where, Nova's one of our core value props is playing the platform level player in that for accessing data on a multi and redundant path player for that purpose. Analytics can be, how do we make sense of the analytics? There's a lot there. I mean, there's a lot within the credit risk sphere that you got to dig into. It's everything from how do we prove the value of this data? How do we actually put it into production in a thoughtful way without blowing up my application funnel? How do I then measure performance? It's not a small feat. So I think anybody who starts to get into that conversation is looking for who has the widest breadth of knowledge and the most touch points with, institutions like me that can help me understand the right way to implement this that will, get organizational alignment internally, as well as make sure that I'm creating real results in a business case. So it kind of, again, goes back to a lot of the business case building. Most risk officers in the analytics world would, they would tell you, like, they know there's value in cash flow data. That's not the secret. It's how do I bring my product team along? How do I think of this consumer permissioned thing? How do I think about this within my model or outside of my model? And how do I ensure my model risk management team appropriately calibrates what I'm doing so that I'm not, I'm ensuring that I'm playing on the right side of that? While capturing consumer trust. So even just those sentences alone involve 4 or 5 stakeholders inside of an institution. And so it's really, how do I get that alignment and bring that to life with a trustworthy partner?
Yeah, the alignment thing comes up a lot, right? And I think, I mean, maybe to drill in on that point just a little bit more, and Tomas, I'd be really curious to get your perspective on this as well. I mean, there's kind of like the question of, okay, how do we access the data from an infrastructure standpoint? And as you said, Chris, a theme that's been coming up in all of Tomas and I's conversation is sort of this like yes and approach of like, we don't want to have just one way of doing it. We want to get it here if this is the best way, or this way if it's the best way, or working with this system if it's the best way. So there's kind of a mix of different approaches you have to take to bring the data in. Obviously, everything you described about incorporating it into models and figuring out how it fits and being able to test its effectiveness and look for lift and all those kind of things. But I also am curious about just like, I think sometimes people forget that like underwriting is a sequential steps of process, right? And a workflow. And I'm curious to get a little bit better understanding of where some of these things fit within a workflow. And like maybe Chris, starting with you, like where you've seen some of these new sources of data slot in initially, if it's second look or something kind of towards the end of the workflow, and like how you see that migrating over time.
Yeah. Yeah. Being really thoughtful around placement of the experience is, it's only as good as the data you can access. And so it's really being thoughtful around what are the use cases and what are the thoughtful ways that you can do true like workflow design. We'll call it workflow design. I think, in the use cases spectrum, second look is a place where we've seen quite a few people, do some initial adoption. Being able to expand to a population that you might already be declining is a low-hanging fruit for somebody to be even thinking about testing on, because invoking a user experience on somebody that you are already declining has minimal cannibalization for you as a financial institution. So little to lose with that consumer, a lot to gain. And so there are all kinds of ways in which you can think about how to invoke that user experience. I'll also say for certain financial products, they effectively approve most people. And so they might approve them, but your down payment for that financial product might be outrageously high and never originating. And so some people might get caught in the world of like, oh, well, it's second look, but I approve everybody. If you're approving somebody, but you're giving them no feasible path to originate, for those customers, it's actually moving them from what we'll call a tier 5 into a tier 3 type of an offer. And so it becomes a game of how do I move up the pricing ladder? How do I think about creating something that will have the same net effect on my business as a second look by virtue of increased originations from an ROI perspective, but by virtue of like thinking thoughtfully around how is my business designed in terms of capturing some of the right terms to actually drive more throughput into my funnel. So I think there's a lot of time and energy on origination. There's a lot of time and energy for the people who have sorted out origination, saying, wow, this is great. Can I get something on a persistent basis to monitor my portfolio here and have the consumer's trust to make sure that if they can actually get more line, they don't have to come to me and ask for it. I can proactively offer them that. Everybody wins in that scenario. And so there's a lot of conversation there. And then I'd say one of the more innovative places where we've kind of pioneered a lot of those efforts, and we've talked a lot about it, is within kind of the prequalification space and the affiliate platforms. One of the best ways to not worry about having to invoke the user experience is if that is completely off your plate as a financial institution and where you're buying half of your leads, being able to capture that cash flow data to have an outsized proportion of it. So some of the more core network players who are playing in actual lead generation around the pre-qual type of space, that's another powerful area for lenders to start capturing some of that data, albeit outside of their direct acquisition funnel.
Yeah, absolutely. Tomas, what do you want to add to that? Because I know you obsess over friction.
I don't know your thoughts, Chris, but it still seems to me that there is this learning curve that it feels like the industry is sort of still going through on consumer permission data, right? So you've got some who are like the full-on adopters, others are sort of maybe in the middle, and you got your laggards. And what I find sometimes related to that is, not wanting to decline on consumer permission data. It's sort of like you said, it's like, well, you can use it for all of the sorts of things. And what I see sort of one of the things happening, I'd love to get your perspective, is, as you said, sort of like these line decisions, these decisions that happen after. So it might be like the price or the amount or the terms that, it all still going towards like the approval, but those things may change based on this consumer permission data. And a lot of times we see that like that actually is better for the consumer and better for the lender, because now it's, a little bit more right sized, I would say, for the consumer. Do you see that as well? Or I'd love to get your perspectives on that.
Yeah, I think, I think it is it has been an easy way for people to get started within the confines in which they have been operating. I think with like lack of regulatory clarity and lack of clarity around aggregation and who's a CRA and how do people play and do you need to issue adverse action? Is this a true decline if it's a second look? All of those kind of gray zone questions come to fruition eventually one way or another, whether that's regulatory pressure or consumer pressure and consumer coming and saying, I was treated unfairly. And so we've started to see, and the industry has largely taken shape around what are the core like tenets and principles if you are going to use the data in that way. One thing that you mentioned, Tomas, around like this is net beneficial for the consumer if it can only be, used positively. I think a lot about that because consumers offering their data for these purposes, could they be more tailored for a different financial product that actually might fit their needs even better? And so I think we have a common perception of like, if you decline a consumer, that's bad for them. And from an institutional perspective, loss mitigation is certainly a benefit. From a consumer perspective, in that give-get and that value exchange, is there something better for them out there? Is there something that they should be recommended for or more tailored for? So I kind of attach to that sentence in general because it just resonates deeply in terms of like what is truly the right move for the consumer and the financial institution. Like creating a fair financial system, I think, is like what we strive to do for the ecosystem, and for that includes financial institutions and consumers. And so like I think that's part of kind of our core belief at Nova. Playing the role of being able to issue explainability in that is paramount to that type of a decision. And so like, I think you haven't had as much clarity around the reason codes and who needs to be providing adverse action. How does that work its way into the system? Being able to attach that to the scores and attributes that are being used for that type of a decision is necessary if you are going to take action like that. And so we have started to see financial institutions who have seen the benefits on the approval side. Certainly, it's a great way to get started and be risk-free on the compliance scene. But the core infrastructure components and analytical players like Nova have already solved a lot of those compliance concerns to actually give a more holistic, purview for your institution to not only look at the growth side of it, but also the loss mitigation side of it.
Yep.
In particular, I'll use like the approve all example where people are approving a bunch of people through the door. Some institutions we work with want to look more at the people that they're already approving as opposed to the people that they're declining, because they, even in a recessionary environment where they're tightening their box, instead of just tightening the box and outright declining consumers, they might put them through this type of an experience to see who they can pull through. So I think there's a little bit of nuance obviously teased out in there, and it's not a super easy answer without regulatory clarity, but institutions have gotten more and more comfortable with the prospect of that with the right tools and right trustworthy partners.
Tomas, has that been consistent with what you've seen from lenders as well?
Yeah, I think so. I think some of the more, I'd say, established lenders, maybe the players who are like the more sophisticated or larger, I think they would still like to have the rules of the road very clearly spelled out for them from a regulatory perspective. And I think a lot of that, Alex, has to do with what you've talked about in the past, which is, well, listen, like the administration or the flavor of the day of regulatory stuff may be changing, but if I'm going to be accountable for this 6 to 12 years down the road, I kind of want to know that I'm playing by the rules that are going to be durable. So I think a lot of them would still like that. But to your point, Chris, it feels like there's this, the folks have largely sort of said, hey, I understand what are the things I need to figure out. And to be on the right side is for both them and the consumer.
100%. Yeah. Just and piggyback on that. Sorry to interrupt you, Alex.
Please, no.
I think part of the answer there is what's best for the consumer.
Yeah.
Right. It's like if you're going to take adverse action on the consumer, and from a regulatory perspective, you're going to feel like you might be exposed to pressure there and be taking an unfair action as a financial institution. What gives the consumer the appropriate path to dispute the information? What gives the consumer the right explainability? That starts pushing us into this, agentic AI conversation to some degree.
We're going to get there, yeah.
We knew we'd hit it somewhere. I knew it would come up eventually.
Everybody drink. No, I'm just kidding.
It's one of the. It's just I think that is one of the obvious answers, is like, how do you give some version of explainability to the decisions you're making and give the appropriate recourse? If you were the consumer on the other side of that table, what would you want? And so like that lives in that decision of like, what do we believe the right side of history will be on? It's really hard to imagine that ultimately gets taken away from consumers.
Well, that is really interesting, right? Because, and this is something Tomas and I have talked about in previous episodes, like FCRA is fascinating to me. It always has been, because it's this very old law where sort of at a technical prescriptive level, it's quite outdated in many ways. And I really do wish we would revisit maybe modernizing it in a more substantial way at some point down the road. But I also think it was strangely prescient in terms of like the spirit behind it and the philosophy of it. And I do find it fascinating, because maybe this is something we can double click into since we have a little bit of time to go in this direction. The compliance stuff is fascinating to me because on the one hand, like we are waiting for certain types of regulatory clarity. I think it can't be sort of underplayed how even like soft signals from regulators, what Chris, you were there like 5-6 years ago when different agencies were like really
100%.
trying to bring people to the table. Like that really had a good galvanizing effect on just the legitimacy of this as a concept, even if not all the rules were fully in place. But I also think, and I don't even know how to phrase this as a question necessarily, but there's a lot of things that we take for granted in traditional credit bureau world that's more of an interpretation slanted towards being good for consumers and good for the ecosystem. That's not necessarily spelled out as like black and white, these are the rules of how this will work. It's just how we've always done it. And generally, we think it leads to good outcomes for lenders and for consumers. And it kind of sets this precedent that more and more just kind of gets built on over time. And like a lot of what the credit bureaus do is more just like a lot of precedent and process accumulated over many, many decades that sort of has the shape and feel and effect of rules in some senses, even though it's not actually legally required. And I guess I'm curious to get both of your perspective on, we're obviously early in all of this, right? Consumers are probably still not always encountering like consumer permissioning as a step within the lending process for getting approved for a loan. But as it becomes more common, I mean, do you think like rules and regulations and policies and procedures will sort of, to a degree, solidify around these best practices that are being built now? Do you expect to see significant regulatory shifts in the future? Chris, maybe I'll go to you first on this, but Tomas, I'd like your feedback as well.
My crystal ball of what happens in the coming months of the world of 1033.
Everyone take notes very carefully. Chris is going to tell us the answer.
I would love to give you the answer there. I don't anticipate anything wildly out of bounds from a lot of the thesis that has been put out there. I think it part of what needs to happen in the market too is giving appropriate breathing room for the correct evolution for both lenders and consumers. And so I think a lot about that in terms of like, we would love the rule book to be written as is for us to all operate nicely. But with that, we might stifle innovation in terms of like how things get moved forward. So long as that doesn't involve consumer harm, like I'm all for pushing the innovation envelope for those who know me. So I think there's a lot to dig into there. I agree with what your general sentiment, which is, there are these like, gray zones that live and exist within the consumer credit world, but that world of traditional credit is also changing. How FICO and the traditional national bureaus operate is changing. And so with that comes like the nature of how do we rethink and design the core tenets and principles of the credit system, which is could not be a more exciting time for people who have been building that type of a space for years. Like where I would say Nova, we're really, really excited about that. And, as we continue to move the industry forward with the big financial institutions to create the most impact as possible, it's really playing a role in helping to advise and consult on what do we think the right best practices are for both sides.
Yeah, absolutely. Tomas, how about you?
Yeah, I generally agree with that. I think what's interesting for me is if you look at where 1033 primarily has been focused, it was primarily focused on the consumer banking data, right? Bank account data. And it's sort of left out and said, hey, later on, we're going to tackle, or maybe we'll tackle the other pockets of consumer financial data. And as we talked about before, Alex and Chris, I think what you're saying too is, listen, I think as long as you are, doing right by the consumer, then I think, and especially I think FCRA as a framework for that is sort of just is really good from a credit perspective. I think you're in a good spot. I think that we're at a point right now where stuff is changing so rapidly in the world of, and we'll get to it on the AI stuff. We'll all have a drink later, but I think it's changing, and I think it's almost redefining the way that consumers interact with their data, share their data, access it, et cetera. That I think you have to rely on these core tenets, and I think they will carry through. And I think, as we talked about before, I think the regulation would just be more to give more confidence in the signaling around those things. So I agree with Chris. I don't see anything wildly out of bounds of what we've already sort of seen or where it's going to be at. But I'm looking forward to it.
Yeah, no, I am too. And I guess now that we've teased it a couple of times, let's have the AI part of the conversation. It's 2026. We have to do this. So I guess maybe one way I've been thinking about this is sort of small and big predictions, right? Or small and big thoughts. So on a small level, I'm curious to get both of your guys' takes on, like, where do you see LLMs, AI, whatever terminology you want to use, sort of impacting the way that any of these processes work? And it could be, I remember I was talking to a lender the other day, and they were saying, like, we actually just asked ChatGPT to evaluate the waterfall of different data sources we use and help us sort of think through that better, right? So it can be something very small and sort of operationally back-end focused. Could be something that's more sort of touching the customer. But I'm curious, maybe on a small scale, if you were to try to give a very sort of confident prediction of a way in which AI will change some of the things that we've been talking about, what's one thing that you'll flag? And then I want to have the more sort of science fiction-y conversation about like larger things that AI could change. But Chris, why don't you start us with something small?
Yeah. Oh man, so much to dig into. Very exciting. It does feel kind of like we're talking about the internet or, cloud storage coming to bear. And we're in one of those, podcast episodes where we're going to be talking about,
how do you think the internet will change lending,
yeah,
Chris?
Exactly.
Yeah.
It's just like, I'm just going to look back on this in years. My kids are going to be like, really? That's what you were talking about? But I think very, very tactically, when it comes to, in particular, when it comes to credit risk signals, attribute scores, like garbage in, garbage out. And so the level of efficacy for things like tagging transactions and being able to categorize and using LLMs in a thoughtful way, in cleansing data is just table stakes practice in terms of like what machine learning can do, and then extrapolate that from there in terms of like how do you wrangle your hands around large data sets to try to synthesize them. There's quite a bit of nuance there, as I'm sure Tomas can attest to, in terms of like how do we think about further cleansing that data? What are the regulatory bounds in which I can and can't use AI for these types of purposes? In fact, many lenders and institutions, because of the explainability of credit type signals, very much push on not involving a ton of AI in those types of processes. And so like you've got a little bit of tension there. I think that's an obvious one that has continued to permeate. I would say one other one is just the acquisition channel is changing for quite a few players. And so, the platform and foundation model players, the Anthropics, the OpenAIs of the world, like you see this, I'll use like the Intuit example, seeing them embed a lot of their solutions into some of those platforms natively, where PayPal is starting to trend in their direction as well, where you see a lot of e-commerce going. Like the ability to discover financial products is fundamentally changing into some of these platforms. And so like it's a really fascinating space where you're like, how far does that rope go in terms of like where all big analytics feed through separately versus these app store concepts that are starting to merge into the core platforms themselves. So that's another area where it seems very obvious, like people are asking those questions, querying those questions, surfacing relevant financial results for somebody in need is no different than a search online.
Sure.
But getting the amount of tailored insights with analytical power that hasn't been seen previously is what makes it super exciting.
Yeah, absolutely. Tomas, how about you?
That's exactly where I was gonna go. I was gonna say the impact that's having on the consumer journey, through these financial experiences is, I think we're already seeing it. I think it just continues to accelerate. And the two examples I would give is, as you said, Chris, consumers are now going to these AI experiences to become more informed, to understand what are the products that might make sense for them or how to make a maybe smarter decision. And then I think what you will continue to see is, since that's where consumers are going to learn more, you're going to see more of this these embedded solutions in there, where it'll streamline the process of, let's say, going through an application for a loan or opening a bank account or things like that. And I think if you see those two things going the way that they are today, then I think going back to where we talked about the consumer permission data, feels like that consumer permission data is going to have to be part of that conversation. Otherwise, how is it going to be hyper personalized for you, right? Both in terms of how you're learning and the product that you're going to be, paired up with, or the service. And so I think that is accelerating very, very quickly. And I'm really excited about that space, about where this is all going.
Yeah, absolutely. The idea that like it can kind of fundamentally change the relationship you have with this type of because it's a search process, right? For a consumer, like fundamentally you are searching for a product. If we're talking about lending, which we are, loans are always like a means to an end, right? And so I've always also thought that there are other financial products or other product types, right? I think about this sometimes with agentic commerce broadly, where it's like sometimes the things you like, the shopping process is part of the product, is part of the experience. And then there are other ones where it's like, I feel like something bad is happening to me, but I don't understand it. And I just want to get through it and away from it as fast as possible. And a lot of lending, unfortunately, fits into that category of I feel like something bad just happened to me. Whenever I buy a car, I walk out and I'm like, I'm happy I have a car, and I hope nothing too bad has happened, and it's kind of funny to think about the idea of having, and this doesn't fit into our science fiction category. Imagine having DealerTrack and Route One embedded as apps in ChatGPT, and instead of me sitting down in the F&I guy's office and him having those services on his desktop, and then only flipping the screen around when he wants to show me something, but otherwise I don't get to see it or query it or ask what any of these terms mean. Putting that on my phone and having me do it, and then me only showing him the screen when I want him to see something, that's a completely different experience that would be much, much better for consumers. All right. Now I'm going to ask you to skate a little out further past to where you think the puck might be. Give me something a little more science fiction-y in terms of where you think some of these capabilities might take some of these experiences or processes we've been talking about. Chris, I'm going to go to you first.
Hyper personalized is great. I think I think there's a lot to be said around where the agentic world goes relative to the credit space, because right now there's a lot of barriers for that to truly take off, from model explainability all the way through every piece of regulation that's somewhat protected from that. So that might there's some thesis here around that being a moat, again in the spirit of consumers ultimately winning out and actually pushing the industry forward. How do you think about someone's agentic reputation and identity relative to themselves versus their agent's personality, right? If that's a mirror of you and taking action for you, how much of that is independent? So we'll go really sci-fi. How would you think of a credit score or behavior of your agent relative to the human?
Okay, so that's interesting. And just to pause on that for a second, it ties to something I've been thinking about, which is the whole, I think consumer advocates call it almost surveillance pricing, right? Where it's we're sort of looking at your behavior and sort of estimating on a very personalized basis your willingness to pay a certain price, and kind of having pricing be more algorithmic in some senses, which is not a foreign concept in financial services, right? We do pricing optimization, and we look at propensity models and all kinds of stuff already. But, building on your point, as a consumer, what if you weren't dealing with me? What if you were dealing with my agent? And my agent has a different reputation and a different set of behaviors and a different set of tells about their propensity or their interest or their sensitivity to different factors. I apologize for interrupting, but that is a really interesting reflection of where we could go.
Yeah, it's Alex squared. When I'm dealing with Alex squared, how do I actually and what is the gap, right? How do I reconcile a gap in behavior that might be more autonomous versus human driven, and which one do I trust more? That's like a fascinating place in which, if you do have these, mini Alexes browsing the web, how do I trust you in a particular instance versus another one? I think a lot of it boils down to trust and security, as I think we've seen in a lot of kind of big data practice, and the ability to take action in particular. And so I'm eager to see where that plays out. I do think it'll take a little bit of time, in particular for the credit space, but like that's a fascinating world in which like we're keen to play and continue to like drive forward.
So I have a maybe ultra science fiction question for you guys on this. So this may be completely crazy, but like, what if we were in a world where there was, universal basic income, because agents and everything have totally transformed the way we work and earn money?
Yeah.
What does that do to underwriting and the whole concept of debt to income? It feels like it shifts the paradigm from like, a focus maybe on cash flow to, hey, should we be looking at, spend and or how else are we going to be judged as humans in the future? I don't know what that world looks like, to be honest with you. It's super scary to me, but it does feel like from a lending perspective or a financial product perspective, what does that world look like in a UBI future? I'm not saying that's where I want to be. I'm just saying if you believe some of the narratives there, where does that take us?
Totally.
It's interesting, and Chris, I'd be curious for your perspective on that. But I will say I've been reading old books about how credit and lending used to work in like the 60s or the 30s or whatever, just trying to like sort of get an appreciation for some of this. And it is fascinating because like the word that is, I think, a little out of favor right now because it doesn't always sound great, but like character was always the word you would use, right? And character was sort of, from a lending perspective, the reflection of like what society sort of thought was a good risk at that time. And it is really interesting going back and reading about the early days of the credit bureaus, because boy, was there some data in the credit bureaus that you would not want to have in there now, and that we would not think in a modern context is reflective of risk. But like risk is both like an objective capacity, cash flow, can you pay this back, second order risks for adding another loan on top of the debt you already have, all that kind of stuff. But it's also like this question of like, who are you and how do you interact in this society, and what risks do we assign to those different behaviors? I have no idea what the answer to that is, but assuming that those underlying things couldn't change if AI does have this type of disruptive effect on the economy and income and stuff overall, like you have to think about that.
100%. How do you think about, disparate treatment relative to the data you're using for those types of decisions? Like, what does that then look like in a world where you're bringing in much more autonomous and behavioral data relative to like credit? I do believe, there's I think about, the meme that's, you're sitting wise and then you go up the curve and then you end up wise again at the very end. There is some version of like, cash is king at the end of the day. And actually someone's like propensity to make money might be how they manage money. There's quite a few ancillary signals, but like at the end of the day, one of the best indicators for that particular instrument, you can make an argument for broader than cash. How are we thinking about reliability and trust in an ecosystem, which starts to become this like fraud and identity conversation a little bit more broadly. But I do think it becomes a conversation of like, how do you access that financial reputation and everything that permeates from your cash flow in particular more broadly. And so that world will be exciting to pave and continue to see kind of broken out in the world of, our agents or mini Alexes out there in the ether.
I totally agree. And I do think mini Alex is such a disturbing thought. I do think that the other thing I will throw into the sci-fi conversation to wrap this up is that we've seen it actually with sort of the kerfuffle that OpenAI and Anthropic have gotten into, and sort of people's opinions about like what contracts they should be agreeing to and what contracts they shouldn't be agreeing to. And it's been funny because one of the outcomes of that has been some people switching from Chat GPT to Anthropic. And I noticed that one of the things that Anthropic did for people coming on to Claude was created like a little tool set for how to export all of your data and history and context from Chat GPT to bring it over to Claude. And boy, I will say, a lot of the data-oriented discussions that are happening right now in the sort of AI, agentic AI world really remind me of open banking, like kind of like in a Vietnam flashback sort of sense. Like it really reminds me in a pretty visceral way of the fights that we've been having for the last couple of decades. And I imagine that agentic AI will just make all of those same fights about like data as a moat, data as a consumer right, a right to privacy, like all of those things are just going to be dredged up probably in a much more significant way thanks to AI. And it won't be financial services like leading that policy discussion. They'll probably be sort of trailing behind lots of other industries and companies that are getting swept into it as well. But that strikes me as something that we will likely be hearing more of in the future. Tomas, to wrap up, do you want to ask our final question?
Yeah. So, Chris, the theme of the podcast is credit without constraints. So, if you could have a magic wand and eliminate one constraint that you think is currently holding back lenders and their approach to underwriting, what would you do with that magic wand? What constraint would you just magically get rid of, and why?
I think this just feels like a la our last topic in general. I would say don't let, if I could remove perfection being the enemy of progress in general.
That's a great one. Yeah.
I think like people in particular in large lending institutions will feel this need to have an answer to what's going to happen in AI. They have a need to figure out everything across open banking. If they're going to bite something off, they got to figure out what the strategy is across the entire organization. And when you look toward that organization, it's messy. And so like they end up in their own way to get moving quickly and sufficiently. And so like that is where smaller and more nimbler companies can start to capture market share because they can move faster and they can get internal alignment faster. So I think it would be like, don't be afraid to take that first step, be reasonable, work with trusted partners who understand, what that dynamic looks like. And that's my general advice for most large institutions and like risk officers and acquisition players that are looking at this and saying like, how do I get started on things like cash flow underwriting? We've been talking about it. We feel like a laggard. Alex, you said it. It's early in the world of this being like the predominant way that people get underwritten. So find the right breadth and depth piece. Right? Like look across your organization and build the right concentric circles of impact you can create across your organization, but find the starting point and look around the corners. And I think that will help people, move the needle much more quickly than trying to design the, ultimate, world takeover plan.
Yeah, designing the whole thing, big brain, galaxy brain style, does tend to slow the process down, and small wins by contrast, and not letting the perfect be the enemy of good. That I think that's a great piece of advice and something to hope for. Chris, thank you so much for joining us. This was an awesome conversation, as I knew it would be, knowing how big of nerds you guys are on this stuff. So thank you very much.
Yeah, thanks, Chris.
Thank you, guys. Thanks, Alex. Thanks, Tomas.
Thank you for listening to this episode of Fintech Takes. Stay up to date with emerging companies and the latest fintech trends by subscribing wherever you get your podcasts. And if you love Fintech Takes, please tell a friend.